Hi everyone and welcome to my channel. Please like the broadcast, hit the subscribe button and be a part of our community. My name is Carol and I'm coming to you live from Johannesburg. So today I decided to make a video based on the need that I see when I talk to some of my clients. And here I'm talking about most of the young upcoming entrepreneurs, people who have just started business either a couple of months ago or a year ago or so, and they're now in a position where they're making regular income, making a profit, and of course they need to earn a salary. They need to pay themselves. They need to eat. Now, when you generally start your business, at that point, you may not know what your regular flow is, unless if you already have a client that you're invoicing monthly. So generally speaking, most entrepreneurs cannot determine what their salaries would be on a monthly basis. Once you know what your salary should be, and most employers would tell you, okay, well, this is what I need to live on, and they're giving you a net salary, you now need to gross it up, and based on that, you now have your basic salary and your deductions. Here's what I would prescribe. If you look at your monthly expenses, your home expenses, you may have your home loan or your rent, your city of Joburg or whatever city you're in, so we're talking about your electricity, we're talking about your water, your rates, your basic needs. And of course, if you have kids, you've got school fees, you've got groceries, you've got a helper, you've got car repayments and petrol and all the rest. You might find that your monthly living expenses are higher than you initially thought. If you're the director of your company, sole director, even if it's just, a couple, like a husband and wife that are director, either way, you can decide some of those expenses can actually be company expenses. So you can have your insurance, both the car and the house. You can have your car repayment. You can even have your mortgage bond for the most part, all coming off your business bank account and being business expenses if you're trading from home. Because then we would say, well, look, the company needs to contribute, therefore they should be paying towards the bond. So most of those expenses, and I mean that includes even things like your cell phone bill, if you have a landline, that bill as well, most of those can actually be paid by the company so that your salary doesn't have to be that high. Tax is very high. Tax in your personal capacity would really be high. And that's why the whole point is trying to reduce your salary, which thereby reduces your tax and leaves you in a better position at the end of the month. For instance, if you're paying yourself a salary of about 40,000 Rand, you can imagine the tax on that. If you reduce your basic salary to, say, for instance, 8,000 Rand, then the pay as you earn on 8,000 Rand is simply 3 Rand 63. If we go up 10,000 Rand, again, very affordable, 20, 30,000 Rand. But once you increase it to about 40 and 50, 60,000 basic, you're looking at a very high pay as you earn bill. To get the exact amounts of pay as you earn, or UIF, well, UIF is obvious that you would pay, you'd have to contact us directly. I don't really want to shout those figures out systematically on my video. However, the point I'm making is once you as a company decide this is the salary you're paying on a monthly basis, you need to register as an employer. I think I've mentioned this before. You get your pay as you earn number with SARS. So you're now registered and you're able to do pay slips and deduct the pay as you earn in UIF. You also need to register with the Department of Labor and get an employer's reference number. So when you're armed with those two reference numbers, it now means that you can have someone do your pay slips, have your deductions, and of course pay over your pay as you earn in UIF by the 7th of the following month. And it must always be done on a working day if you want to avoid penalties. And of course, if the 7th falls on a weekend, you must do it the Friday before the 7th. That is the minimum requirement. And of course, just if you're planning to increase your salary, if you're planning to vary it a little bit, you want to add some allowances here and there, just know, unless if it's something like a travel allowance or a reimbursive allowance, most other allowances are subject to the same level of tax. It's all taxed at the same rate. So travel allowance is the exception to the rule, and reimbursive, say for instance, if you travel and you use your own money and the company is reimbursing you for Uber fees or something like that, that is non-taxable. Of course, there's also little things like you might have a canteen allowance, a non-taxable one. But the most of the amounts on your payslip are actually taxable. So contact us and enjoy this video and be informed.